Okay, so let me go ahead and start. I hope this is being recorded. If not, if those of you who are watching this were not able to watch it live, there will be a recording of this that will be posted for you to watch later. But what I wanted to cover today is, why is the stock market important to everybody? I run across this all the time where I've taught about the stock market now for well over about 25 years now, and I've taught lots of classes. I've done one-on-one sessions. I've done online sessions with people, and I hear the same thing over and over, that yeah, the stock market's important, but I don't know anything about it. Well, why is it important? Okay, not knowing anything about it, that's a different thing to talk about. But why is it important? And that's what I want to just talk about briefly for a few minutes today. Then I'll open it up for any Q&A later on. This should only take anywhere from 15 to 20 minutes. And then I had planned on about 10 minutes for some questions and answers that any of you might have. So with that being said, let's go ahead and move on. So what is the stock market, first of all? If we have this important thing, what is it, if it's so important? And you can see the little chart here that looks kind of like an EKG. And that's, if you were to look at a chart of most stocks, that's about what they look like. They don't go straight up or straight down. But it's a public market where people can buy and sell shares on a stock exchange. Just think of it as like a big store. Except when you go shopping now, you go into a place and you buy something. It's pretty much a one-sided transaction at that point. Well, when you go into a stock market, you can not only go into that stock market to buy, and it would be shares of a company such as Microsoft or Google or Apple or Boeing, but you can also go into that store and sell. So it's a place where people can buy and sell shares, and it's a central location. And you might have heard of some of the famous stock exchanges that I'll mention here, such as the New York Stock Exchange or the NASDAQ. Really, all that is, think of it like a store that's lining up buyers and sellers. There are people that want to buy shares of a stock. There are people that want to sell shares of a stock. And it's a public place. Although, don't think that you can just walk right in to a stock exchange and say, here's my 100, give me 100 shares of Microsoft right now. It doesn't work that way, but our transactions work that way. We have to do it through brokers, and there's a whole team of people that we have to go through for our transactions to take place. But for us, we can just be sitting on a computer, and we can go in and we can buy, and we can go in and we can sell, and at that central location. And the shares of these companies, they represent ownership. So if you own any Microsoft stock or Boeing stock or whatever company, you are part owner of that company. Now, you may not be a very big owner of that company, but you are part owner. You've decided to take some of your money and put it into this stock, usually with the idea that it will go up in value. That you invest in something today that's $10 for one share, that in the future, you might be able to go back into that stock exchange and then sell it for maybe $20 a share, maybe 10 years down the road. And so you've doubled your money, but you invested wisely in a company that, as it earns more money, as it has new products, as it discovers new things, or comes up with new innovative ways of doing things, people see that that company is more valuable, and so they push the value of those stocks up. The inverse is also true. There may be a company where it's looking really good, and then after a period of time, maybe they haven't modernized, maybe they haven't changed, maybe a lot of the things that they used to do were good at the time, but they're not necessarily good now. So they're earning less money, and the values of those shares will drop over a period of time, and you actually get less back than what you put in. But nonetheless, it represents ownership of a company. So then the value of these shares fluctuates each day. Every day that the stock market is open, and they try to keep the markets open as much as possible, just for this reason. Any kind of things, news about the company, news about the country, things that are going on, they want the stock market open as much as possible so that stocks have a chance to react. And that helps, it doesn't prevent by any means, but it helps to avoid from the stock opening, let's say it closed one day at 10, and then a week later, it opens at 5. Okay, well, you didn't do anything during that 7-day period of time if the stock market was closed. Well, if it was open as it dropped to 9 or 8 or 7, you would have had a chance to get in there and sell your stock. And again, the inverse is also true. You might have, and this happens all the time, you sell a stock at 10 thinking that it's going to go down, and then suddenly it goes up to 20. So, and that, believe it or not, that happens quite a bit. Usually a lot of things about the stock market is that the opposite ends up happening of what logically in your mind you think will happen. Okay, so why do stock markets even exist? The markets have existed for hundreds of years. Back in the 1500s, there was an unofficial stock market. Was it Amsterdam? No, Amsterdam opened the first one in the 1500s, 1600s, and we pretty much have had stock markets ever since. And the stock market in the U.S. has been around well over 100 years, 150 years probably, and it's down. People used to get together under a big buttonwood tree on a street called Wall Street, and that's where we get that name from. It was a street that had a big wall on it, and that's where the name comes from. Well, they eventually built a building, and then now it's inside of that building where these transactions take place. But stock markets are not new. They've been around for a long time. They've changed in some ways. Things are more modernized now. Technology is much greater than it used to be. But the concept has not changed. And then private companies, why do they even put stock out there? Why does a company like Microsoft or Starbucks or Amazon, why do they make their stock available? Well, for them, when they initially offer this stock, it's a way for them to raise capital. They give away part of the company by selling it, and then they bring in money for that, and they can use that to invest into new products, into research, into new things that they want to do. They can also use it to build new factories or new plants or open up more businesses. They can also hire people, and they can really start to expand and become a bigger company. And then, of course, we think of the stock market as a way to create personal wealth. And right now, well, not right now because the stock market's closed, but any business day, you can go in and you can buy or sell shares of stock with the idea of this is going to increase in value. Whatever transaction you did, you're hoping is going to become more valuable. And then at some point you can sell that for a profit. So the idea is that you gain wealth from that. Your shares increase in value, or your portfolio increases in value, and it's part of making yourself more wealthy. And it also helps increase investments in the economy. When the stock market is doing well, when generally it's going up, you're investing, basically you're betting on the future of America at that point. Or you're betting on the future of the world, basically, because a lot of these companies operate all over the globe. But as more money is available, this then gets fed back into the economy as jobs, as products. Um, they find ways to make things cheaper, so it makes it easier for us to buy. And this now we can afford to buy these things. So once we buy something, that helps the economy. We go to a place to buy something, people work there, so they help to provide jobs. So it just kind of feeds itself. And the stock market plays a really big role in that happening. And it also serves as an indicator of the state of the economy. Now, right now, we're seeing a real disconnect as I record this on January 4th, 2021. And I want to say Happy New Year to everybody. But the stock market is going up where we're having some real difficulties economically right now. And I'll talk more about that in future lessons. But the stock market anyway is looking right now, it's looking positive for what lies ahead. It's a good leading indicator of what the economy will be doing. So that's one reason why we want to pay attention to it, is if the stock market is going up, there's a lot of people, very smart people with a lot of money, who think that things are going to be better in the future. If the stock market is going down, the trend is down, not just 1 or 2 days, but if it's really just overall headed down, then a lot of smart people with a lot of money are seeing negative things in the future. And that's how you have the fluctuations that occur. So it's a really good indication of what is happening in the economy. And the stock market does not operate in a vacuum. It's not its own separate little entity that does its own thing. No, it's influenced by not only the companies that make up the stock exchange, what's happening in Microsoft, what's happening in Google, what's happening in Boeing. That affects the stock market. And then we have different geopolitical events, whether inside of the US, different things that are happening. Are more people getting laid off? Are more people getting jobs? Are more people spending more money? Are they spending less money? All of those things feed into the stock market, and then the stock market feeds into those things. So it all works together. It's not a whole separate entity in and of itself. Then it can also be very good at predicting future expectations. Now, I'm not saying realities, okay? The stock market is notorious for getting ahead of itself and going to extremes, either to the positive side or to the negative side. And again, I'll talk more about that in upcoming lessons. And then it's, what is your confidence in the economy? Generally, when the stock market is up, the world's a better place. Okay, now even though we've been through a lot over this last year, the stock market has been holding up really well. And again, in one of the lessons coming up, I'm going to talk about why that's happening. And because there are a lot of people that have confidence that we're going to be able to pull this whole COVID-19 lockdown thing around. And even though things will be different, they'll still be good in the future. Plus, are there just a few companies that are really keeping the stock market higher, or is this a broad-based confidence in the stocks because there's a broad-based confidence in the economy? And those are the things that we look at, and I'll talk a little bit about. And then this can affect non-investors in the economy. A lot of people say, well, I don't own any stocks. I don't participate in the stock market. Why do I need to pay attention to it? This is what I want to talk about next, because it does influence everybody. And anywhere from about half to 60% of Americans directly participate in the stock market. Well, and I've tried to find actual numbers, but every article I read gives a different percentage. But 70 to 80%, if not even higher, of all people are affected by what the stock market does. If it goes up, that has an impact on people. If it goes down, that also has an impact on people, even if you don't own any stock at all. So why should you even care about this? What does this matter to you? A lot of people think, well, yeah, I get into the stock market, I can make some money, you know, I can buy some stock at 10, sell it at 20, woohoo. Well, it still impacts you even if you don't participate. So everyone is affected regardless of whether or not you actually invest in stocks. You have a pension plan where you work. That is definitely affected by the stock market. What about a retirement account, a 401k? That value is tied directly to the stock market. You may not actually participate in it other than contributing to your pension fund or to your retirement account, but the biggest vehicle, or I should say one of the biggest vehicles that are used in pension funds and retirement accounts are stocks. And so if the stock market is going up, your retirement is looking better. If the stock market's going down, your retirement is looking worse. So that is one way that it can impact you. What about employee benefits? A lot of you work at companies where you get health insurance, life insurance, things like that. Well, you probably have some kind of a retirement plan at a lot of companies, especially the bigger companies. And if the market's going up, your benefits are going up as well. If the market's going down, your benefits may be reduced in that case. So that has a direct impact on you, even though you don't really follow what's going on in the stock market. And then job security. If we have a real downturn in the economy, I mean, look, you shut down half of America's economy, and a lot of people don't have jobs anymore. Companies that have been around a long time, usually smaller companies that now have had to go out of business. But as things go down, and sometimes you can look at that, you can get clues from looking at the stock market. As it goes down, a lot of times you'll see layoffs. People lose their jobs. Companies have to cut back. They can't spend as much money as they could before. In good times, well, with the stock market going up, that means that a company can expand, it can hire more people, it can do new things, and it's easier for people to either find a job or to keep the job that they have. And then consumer trends. This is an interesting thing. Things have changed over the last 150 years or so, where in the 1800s, the big stocks to own were railroad stocks. We don't really... I mean, yes, there are still trains in America, but not like there used to be. That isn't the main form of transportation. Then, throughout most of the 1900s, the big car companies, General Motors, Ford, Chrysler, the big boys that build all the cars, they were considered to be the backbone of the U.S. economy. Now, they're not really, I mean, they're important and they still trade and we still need cars. But now this has given way to more service-oriented companies, high-tech, IT-type companies like Facebook, Google, Apple, Microsoft, and companies like that, because we're headed off in more of a high-tech direction. And so I don't know if any of you ever watched Downton Abbey, long time ago, a series on PBS, but during the early part of that series, the head of the family lost almost all their money because he stayed invested in railroad stocks. When we were starting to go through the Industrial Revolution at that point, and this was in the early 1900s, and the economy was really changing, well, he stayed the same. And he almost lost everything because of that. So there does need to be adjustments over time in keeping an eye on what's happening. So the economy does change over time. What everybody is focused on right now is different than what everybody, look, think about companies like Google, Apple, Yahoo. These are companies that 25 years ago didn't even exist. And they've got these funny names that the first time you hear it, you're like, that sounds kind of crazy. But Google, I mean, what strange name is that? And a thing called YouTube. This whole internet thing. I mean, 25 years ago, yeah, it existed, but not like it does today. And things have really shifted over the last 20 to 25 years or so. And then housing values. What if you own your own house? You may not own, most people put their wealth into their house. That you're hoping for a build up in equity. Well, what if people are trying to sell their house and there's not a lot of people wanting to buy the house? Well, you have to lower the price. And as you lower that price over time, and as other houses around you sell, that lets you know of the value of your house. And in good times, the value of your house will go up. In bad times, the value of the house will go down. And a lot of that is driven by the stock market. Okay, then another thing that it can really impact, I just want to look and see. I don't even know if I'm streaming right now or not, but I am recording. I'm just not really seeing anybody logged in at the moment. But interest rates. This is the price that you pay to borrow money. So, and this can have a real impact, and it also has an impact either in the stock market, and the stock market also impacts interest rates as well. So as stocks go up, interest rates usually go up as well. And I'll bring up a chart in a future lesson that talks about that. And you can just see that because a lot of people say, oh no, interest rates are going up and why are they raising rates? Well, the idea behind the US economy is we want to keep it as even as possible. And when it starts getting too hot, we need to cool it down. How do they cool it down? They cool it down by raising interest rates, making money more expensive to borrow. And then if we start going below that even line, they need to try to stimulate the economy or get the economy going. And so they make it less expensive for companies or people to borrow money because they're going to take that money and put it into the economy. And so then they lower the interest rates, and that helps to get the economy going again. At least that's a large part of the monetary theory that we deal with right now. But just watch this. Over time, as the stock market goes up, but there are some real exceptions. And this is even starting to change a little bit. Over the last, I would say, 12 to 13 years, we've seen a real shift where interest rates have not gone up, but the stock market has. And there's some reasons behind that I won't talk about in these lessons, but I will just, I teach classes on these things, and I will share that information in the classes. So interest rates can impact your mortgage payment, especially if you have a flexible rate mortgage, or if you're going out to get a new mortgage. I mean, right now, you can get down into the 2% or so for a mortgage, or at least very low. I remember when I was growing up and we would talk about a savings account at a bank, we used to just use the default figure, 5%. Well, 5% would be really high right now, where you're lucky if you get 0.25% interest on a savings account at your bank right now. Well, the same is true with mortgages and the payments. Whether you're getting a new mortgage or if you have a flexible rate mortgage, as interest rates go up and down, that can work for you. But in life, you kind of have to plan on it working against you, just to lock in a lower rate that goes for a long period of time. And then loans. If you try to go to the bank, sometimes it's like, here, take this money. We're loaning money to everybody. Where there's other times where even if you're a multimillionaire already and you have lots of real estate and you're doing quite well, the bank is going to go, nope, sorry, can't help you. We're not really loaning any money right now. And so the economy fluctuates and things go up and down. And interest rates, as they go up and down, it's how much is that going to cost you to borrow that money from somebody? And then, of course, credit cards, which are, even when we're down at the low interest rates that we are now, credit cards are still, 18, 20, 22% interest? They're making their money. So that's why credit can really do a lot of damage to people. because we can buy something right now, but the interest that we have to pay to be able to buy something right now, a lot of times is through the roof. And so there is a real disconnect. That's why a lot of people really try to get out of debt and not have any credit card debt and do things based on a cash basis as much as possible. Where other types of debt, like a mortgage or even like a car, those are usually our two biggest assets. Those interest rates tend to be lower and they don't affect us as much. Where credit cards, they're still sky high as far as interest rates are concerned. Okay, so one word of wisdom that I can offer you to think about if you're asking questions is paying attention to the stock market will often allow you to anticipate and prepare for things before they happen. The market is a great indicator of what will happen in the future. And these things don't just happen overnight. They happen over a period of time. So if we start to see trouble ahead, then the stock market is a great place to look for that. So as you watch the stock market, you can then say, well, yeah, things are looking pretty healthy right now. Okay, this is a good time to open a business or maybe go to school or buy that second home or get a vacation house or become a rental, buy houses to rent them out. Watching the stock market can help you make better decisions in that. And then by the time any significant stock movement takes place, especially a crash, and it becomes headline news where it's on the front page of the paper or the front page of the website that you go to for news, and it's the leading story on the news on all the news channels, it's too late at that point. You needed to prepare for these things way before they happened. And that's why it can really be to your benefit to keep a consistent eye on the stock market so that over a period of time, you can see things sometimes months before they happen. These things don't just instantly happen. The things that do instantly happen, we usually quickly recover from those. And I'm thinking of Brexit. A few years ago, that caught the markets off guard. And the market tanked for a couple of days, but then within a couple of weeks, it was back to where it was before and then shot on to new highs. The election of 2016, that caught the markets by surprise. And it fell for a few days, but then it got itself together because the overall trend was still up and things were still looking positive, and then went on to even go higher. This whole the COVID-19 meltdown, where we saw an over 30% drop in a lot of the big stock indexes in a short period of time. Well, we've been able to recover that, at least to this point. Now, there are other reasons for that than just America's doing great, but we've been able to come back to that, and we're either at or near all-time highs as I record this in early 2021. So specific events that happened, just to give you another example, the 9/11 didn't happen in a vacuum. The market had already been heading down, and this is what's interesting about the market. When it's in an overall uptrend, good things tend to happen. When it's in a downtrend, bad things tend to happen. Well, over a year before 9/11 even happened, the stock market was already going down. We didn't know what was going to happen, but by watching the stock market, it's like something's not right here. Some big event could happen that is really going to take the markets even lower, and then boom, we get hit at 9/11. That closes the stock market for a week, which had never happened before. And then the economy really went into a bad time, and it took us a number of years to work our way out of that. And we're seeing a bit of that with the COVID-19. Right before the pandemic broke in the US, stock market was at all-time highs. And we crashed quickly, but because of some things, not just companies, but since the overall trend had been up, we've been able to get back what we lost and then even add to some of the gains of the market. So, And a lot of what I do is I study these things and I look for these things and I can see them way in advance of when they're happening so that you're not caught off guard when they do finally start to happen. So even if you are not an active investor, watching the stock market can help you to make better decisions. You're more educated. Instead of just talking with your neighbor or going on a gut feeling, base some of your decisions on actual facts, on what's actually happening. And then you can take that and then say, okay, this is a good time to maybe take out a second mortgage or get a home equity line of credit or start that business or maybe get that vacation home that you've always wanted to have. So as an added bonus, what I've done here is there's a link that I'll put right below this video once it's finally posted on YouTube, where you can watch a free workshop that provides you some insight. And I don't just talk about the stock market. I talk about music. I talk about, what are the things I talk about? Lots of different things, athletics, different things. But these are principles that can be applied to giving you different insights as to how to look at the stock market, and also to entice you as either an investor or a participant in the U.S. economy to ask questions, maybe questions you didn't even know to ask, and then consider some new alternatives. They're the tried and true way of investing: buy low, sell high. There are many more alternatives than just that. There are lots of alternatives that you probably don't know about, or there are ways that you can protect what you already have, so that if the market really does go down, it's like buying insurance on your stocks. There are ways that you can do that. So watch that video. It's less than an hour in length, and just see what you think. But that's free for you to watch. I'm not trying to sell you anything. And so just see what you think of that video, but those that watch this video will have access to that. It's not freely available on YouTube. You have to actually sign up to watch that workshop, is what I'm calling it. So it's less than an hour in length. So if you can sit and listen to me, kind of like how I'm talking right now, for about an hour, feel free to watch that and then give me lots of feedback about what you think of that video. So I want to try to keep in communication with you. Some of you that are watching are very dear friends of mine, and I haven't talked to you in a while. This might be a good opportunity for us to talk. So you can email me at john@spxinvesting.com. Just send me an email saying hello, or I like this, I didn't like that, what about this, what about that. Feel free. So we can exchange emails. We can also do a video or an audio call. So feel free to contact me to schedule an online video or audio call using Skype, Zoom, or Messenger. I kind of have to do things that way right now. Just using a regular phone is not really an alternative to me right now. And plus I'd like to see you. But if you don't like to use video, we can always use Skype or Zoom or Messenger and just talk by voice if you would prefer to do it that way. So let me know. I'd love to talk to you. I miss a lot of you. It's been a lot of years since I've seen some of you, and it'd be great to connect again. So, and I've also created this is a public Facebook group that's been created. It's brand new. There's only, I think, 2 people in it as I record this, myself and one other person. And feel free to join that. And doesn't cost you anything. You can come in, you can ask questions, you can see posts that are in there. I'll be very active in that Facebook group. I'm even thinking of maybe doing some Facebook broadcasts. And this can be a place to ask questions, get ideas, and just throw things back and forth. And we'll kind of but we don't want this to be, hey, how's it going? What you been up to? Yeah, we'll get a load of the Seahawks. They're in the playoffs this year. Okay, we want to keep that kind of talk away. We want this to mainly be focused on the stock market discussion. Let's jump over to the other Facebook to talk about the other things. But in this group, let's try to keep it more focused but it's free and anyone can join. You can invite anybody to join that you want. It's just another information source for you. And then invitations will be sent out for you to become part of this group, or you can request them. It's a public open group, so it's pretty easy to get into. So I want to thank you for taking some time to watch this. This went on a little longer than I anticipated. Yes, I teach Chinese children online English lessons, and yes, that is one of my students, but she's so adorable that I just had to put her parents said it was okay to put the picture up here, so I went ahead and did that. But I appreciate everyone taking the time to attend this lesson. There'll be another lesson tomorrow. So this is lesson number 1. There will be 10 lessons that we go through. So if you can't tune in live, you're welcome to watch the recording. If desired, please click on the like, or if you didn't like this video, hit the dislike button below. If you didn't like it, hey, I'm a big boy, I can handle it. And please leave any comments that you have, whether great job, or if you have a more serious question, what do you think about this, or what do you think about that, or I don't agree with you about this or that. You can put it in the Facebook discussion group, or you can put it in the YouTube comments. But that's one way that it would really help me, is just by subscribing and hitting the little bell, and then putting comments, and then watching the video all the way through. That's what helps the most, is from beginning to end. I don't need clicks. I need people to watch. Even if you don't watch the video, just turn it on and you're not interested in what I'm talking about, and you can walk away, come back in a few minutes, the video's over. Great, you've helped me by having the people watch the entire video, not just a little part of it. So also consider subscribing to my YouTube channel and clicking the bell when you want to be notified about new videos when they're posted. And then on Tuesday, January 5th, 2021 at 7 p.m., I'll be doing lesson 2. And I'm not exactly sure, I have this all organized how I want to talk about it, but I want to get some feedback from people before I actually put in stone what I'm going to talk about. But feel free to join me again. And if you have any questions, let me see. I can't tell if anybody's logged in, even watching this or not. So somebody just sent me a message on my phone. Let me check that. Okay, I'm looking here to see. And this is the very first live YouTube broadcast I've done. So trying to work out a lot of the different details has been quite challenging if you've never done something like this before. Okay, I'm trying to bring up a discussion, but it's just not coming up. So I'm going to go, I don't see anything in chat. If there are some things in chat, I will read through all of those questions and comments afterward, and then I'll respond to those, either in the comments on Facebook, in the comments on YouTube, or by email. I will respond to all of your questions. Oh, it says there, see, I set up another computer. Oh, there are some questions here. Okay, folks. Hi, Dana. Oh, I miss you. You are such a lovely person. I have another person that's actually watching the feed right now and sending me the questions, because when I do it full screen like this, I can't see the chat. Okay. We were thinking, okay, I need to look at this. Yeah, okay, so you're thinking of refinancing. It's a good time to refinance. I'm not a financial planner. I'm not a banker, but with interest rates as low, and they, believe it or not, they might even go lower. Can you believe that? You might get to the point where you go to the bank and you borrow money, and then they'll pay you interest for borrowing money from them. That's actually happening in Japan and in Germany, and in some cases, especially in Germany right now. The stock market is so confusing, yes, to watch. I hope to learn more about what to watch for. I have my retirement invested through stocks. Okay, yes, this is what I do, Dana. I teach classes on this. I do videos on this. I have workshops, and you've come to the right place. I can tell you that. And and also, Dana, you ask, what is SPX? That's a very good question. I'll explain this in some of the upcoming lessons, but SPX is one of the symbols for the S&P 500. There's the Dow Jones Industrial Average, which you probably have heard of, or the Dow. There's the NASDAQ. There's the NASDAQ 100. Well, SPX is the S&P 500, and that is pretty much my focus, is the S&P 500, and so I called this SPX, just because of that. Oh, and the Facebook page name, it's the stock market discussion group. I'll send you an invitation on Facebook as soon as I get done with this. Okay. Oh, hello, Rita. Just Rita, sorry. Yeah, there's a lot of fear that it will drop. And there are ways that you can protect yourself. In fact, over the years, I've been an active participant for well over 25 years in the stock market. I've made most of my personal money when the market goes down, believe it or not. And in what I do, in what I teach, shows you how you can take advantage of that. Oh, hey, Darren, how you doing? You playing drums these days? Yeah, you're there too. Good for you. Yes, what I'll do, Rita, is those of you that are asking questions, I'll send you a direct invitation. So that shouldn't be any problem getting you into the group. There's really not much there now other than posting for this particular broadcast that we're doing. And these are all the questions I'm getting as of right now. So, okay, yeah, this went a little longer than I thought. And those of you that know me know that I can talk. All right. And so if I say 10 minutes, plan on it being at least 20. But I would rather have too much to say than nothing to say. But, oh, Darren, I miss you, buddy. I miss you big time. All of you are people that are very dear to me. So thank you very much for coming to this. So that concludes my part of things. I don't see any more questions right now. There will be a recording of this. Even those of you that tuned in, if you could take some time to watch that recording, that would be a great help to me. And what I'm trying to do is to get a stronger presence on YouTube. And by people watching the videos, by searching for me, that's how you can do that. And so that would be helpful. And I have a PDF of all of the slides that I used for the presentation today that I can post it in our Facebook group, or I can email that to you as well if you want to print this out. And it's printer friendly. I took all the pictures out and it's just text. And maybe watch this and take some notes. You're more than welcome to do that. And as I said, feel free to set up a time where we can talk on Skype or Zoom or Messenger. I would love to talk to you. You're welcome. Let's see. Oh, Rita said, I wanted to refinance my home, but Social Security and unemployment, don't count as income. So I can't. Yeah, that's difficult right now. Things are really changing in the U.S. The economy, well, depending on who you listen to, there's this big reset, is what they're calling it. And things are going to be a lot different now. So I don't, if things get really bad, they might be giving mortgages away. I'm not really sure. Okay. All right, Dana. Yes, thank you. So Rita, I didn't really answer your question, or I just kind of addressed your statement. But we can talk about those things. Even though the stock market is my real area of expertise, I know that a lot of you are impacted in a lot of different areas. So, okay, I'm going to go ahead and end this broadcast for now. So thank you for tuning in. There'll be another one almost 23 hours from now. And I plan on going Monday through Friday this week, and then Monday through Friday next week. And I'll be hitting different topics each time. If you have an idea, the thing is, tell me what you want. I have it all planned out, what I want to talk about, but that's not written in stone. So if you have something that you want to talk about that I can talk about in a short period of time, let me know. I have classes developed, recorded, the curriculum all worked out. I have videos that I do every day where the whole format is all planned out. But that's what I think you want. What I need you to do is tell me, how can I help you? And be prepared, though, because I do things in a different way than a lot of people. And I think it's an innovative way and a more beneficial way that will help you in both the short term and the long term. Oh, okay. All you have, this will be posted as a video on YouTube. Rita, I will send you the link to the video. And we'll see you tomorrow. Thank you. Thank you very much, Just Rita. I call you Rita. I'm sorry. I know your name is really Just Rita. Lovely Rita is usually what I call you after the great song. So God bless all of you. Have a wonderful evening. And I hope to see you again at the next broadcast. And drive safe if you're driving anywhere, and have a really good night. And take care. So bye-bye for now.